Hi guys, this is a very important video. Today I'm going to walk you through the top 10 crypto market predictions for 2025. So this report comes from OneNeck, a huge traditional financial institution with a major presence in the crypto market. They have been pretty spot on their predictions year after year. So when people ask,
just tell me how much can I make in 2025?
After watching this video, you will have a much clearer idea. So when you have made money in the market, especially when you're at a peak, you're always thinking about when to exit, right? So exiting can mean selling your crypto for cash or stablecoins, or taking these profits and spending them in real life, like buying a car, a house, or going on a crazy vacation. But here's the thing, when everyone starts throwing money around like it's nothing, feeling overconfident and greedy, that's when you need to start getting worried. Right now, I still feel like there's a lot of caution in the market, and at least that's how I see it. Of course, there's still a lot of global back and forth about Bitcoin and whether it will be used as a strategic reserve. And President Trump might introduce some policies that could be good for the crypto market, but these are just all predictions for now. Nothing has really been set in motion yet. So I personally don't think we're at the market peak just yet. But the reason why we're talking about this at this particular time is that exiting the crypto market is way harder to time than entering. So you will want some time to think about it and plan your strategy. Alright, now let's dive into OneNeck's 2025 crypto predictions. So OneNeck, founded in 1950, is an asset management company known for their innovative products and research into emerging markets. They were also one of the first traditional financial institutions to get into crypto. In 2021, they launched a Bitcoin strategic ETF, and in 2024, they introduced a Bitcoin spot ETF. And as we go through this report, I will add my own thoughts too. The first prediction from this report is that the bull market will peak during the fourth quarter of 2025, hitting a mid-cycle high and then break new records in quarter 4 of 2025, from January to March. The report mentions that we will see big spike, but then Bitcoin could face a 30% correction in the summer. And altcoins might see even steeper declines, with potential drops of 60%. So the pullback can be really brutal. But by fall, the major coins will start to rise again. And by the end of this year, we could see new highs. They predict that the Bitcoin peak will be around 180,000, Ethereum will hit over 6,000, and Solana will reach $500, and Sweet could hit $10. I'm just so happy to hear that. And this is OneNeck's prediction. But here's where I got a little worried. Let's say someone watching this video who decides to hold onto Solana, hoping it hits $500 mark. But what if it never does? You might hold onto it for ages, like thinking, it is going to hit $500, I need it now. And then it peaks at $499 and starts the drop. So always remember, no prediction is 100% accurate. The key is understanding the logic behind the report or prediction. Big institutions like OneNeck only know so much. To really know when the market is close to its peak, you need to watch for certain signals. So here are 5 key signals to track, which will actually help you understand the market better than just relying on predictions. The first signal is high funding rates for a prolonged period. Funding rates are unique to perpetual contracts, and they help keep the contract price aligned with the spot asset price. And in a strong market, the buyer will pay a fee to the sellers to maintain that balance. If you're seeing a lot of people buying Bitcoin and they're willing to pay funding rates above 10% annually, and they are doing it for 3 months or longer, that could be a sign that the market is overheating. There is a lot of greed and speculation going on. And if we look back at the last bull run in January 2021, people were paying 20% funding rates for loans. In February 2021, it jumped to 33%, and by April, it dropped back down to the low 20s. And then, we all know what happened, right? The market crashed. So if funding rates stay above 10% or for more than 3 months, that could signal the market is about to turn from bull to bear. Second signal is when too many people start realizing their profits. But before we dive into that, let me clarify a few terms. Realized profits refer to when the value of your assets increases, but you haven't actually sold them yet. So these profits are just on paper, they have been locked in. Now, Bitcoin holders' profit cost ratio is important here. For example, let's say you bought Bitcoin at $100,000, and later the price hit $170,000. Your profit and cost ratio will be 70% because you made $70,000, which is 70% of your original investment. If you see a stable increase in the number of Bitcoin holders with a profit and cost ratio above 70%, it's a sign that the market is getting euphoric. When a significant percentage of holders are in profit, it usually indicates that we are entering a phase of extreme bullish sentiment. The third important metric is MVRV. This metric helps us gauge how profitable Bitcoin holders are and what the overall market sentiment is, whether it's more fearful or more greedy. The higher the MVRV, the closer the market is to the top. The lower the MVRV, the closer we are at to the bottom. And the report says that when MVRV exceeds 5, it indicates that Bitcoin's current price is well above the average purchase price, meaning the market is really overheated. The fourth key indicator is Bitcoin's market dominance. If Bitcoin's share of the total cryptocurrency market falls below 40%, it suggests that speculation is shifting toward riskier altcoins. This is a classic behavior in the later stage of the bull market, where people start looking for bigger gains. The fifth important signal is to pay attention to what is going on around you. If you start hearing about a bunch of random crypto projects from people who are clearly not even in the crypto space, like family members or old friends of yours asking you if they should buy into some obscure token or sending you links, this is usually a sign the market is getting close to the top. It's not necessarily about them asking about Bitcoin though. It's those random weird projects. For example, if a friend of you haven't talked to you in ages suddenly message you saying, "Hey, this YouTuber said Rockycoin is gonna be the top currency on Mars. How do I buy it?" That's a major red flag. Now, the second prediction. The report predicts that the US will adopt Bitcoin as a strategic reserve asset, increasing crypto adoption in general. With Trump in office and having appointed a bunch of pro-crypto individuals to key positions, the anti-crypto policies of the past might soon come to an end, and Bitcoin is said to be defined as a strategic reserve asset. And OneNet predicts that by 2025, the US government, or at least states like Pennsylvania, Florida, or Texas, will begin building their own Bitcoin reserve. OneNet believes that this transition could happen via executive orders through the US Treasury's Foreign Exchange Stabilization Fund. Of course, bipartisan legislation is also a possibility. Additionally, state governments may buy Bitcoin to hedge against the financial uncertainty or to foster innovation. In Bitcoin mining, there are currently 8 countries using government resources for mining, up from just 2 in 2020. OneNet predicts that by 2025, more than 10 countries will be doing the same thing. This trend is largely driven by BRICS, Brazil, Russia, India, China, and South Africa, with Russia already publicly stating that we'll use crypto for international trade settlements, saying, "If you don't like it, feel free to freeze us." This gives Bitcoin an even more important role in global economic strategy. And with now the US regulatory environment is becoming more open too, OneNet estimates that the percentage of US crypto developers will increase from 19% to 25%. Bitcoin mining activity in the US is also set to grow. Its hash rate share is expected to rise from 28% in 2024 to 35% by 2025. This is mainly due to the cheap entry, energy costs, and possibly favorable tax policies for crypto. This report also predicts that the corporate Bitcoin holdings will increase by 43%.
You do not sell your Bitcoin.
Right now, 68 publicly traded companies already hold Bitcoin on their balance sheets, and OneNet predicts that the number will hit 100 by 2025. Additionally, OneNet boldly predicts that the total Bitcoin held by private and public companies combined is around 765,000 Bitcoin. And by the time we're filming this, MicroStrategy might have bought even more, who knows? It's pretty close to that figure. By 2025, they expect the number to surpass the 1.1 million Bitcoin held by Satoshi's wallet. This is a super important indicator. Publicly traded companies are holding Bitcoin. You can bet they have done their homework. Just like any savvy investor, Bitcoin is really interesting. Take a look at their chart. Bitcoin is represented by the gray bars and gold by blue. So as you can see, a huge portion of the world's Bitcoin is still privately held, and the percentage far outweighs gold. This is why a lot of people say, hey, don't sell your Bitcoin easily. Because when retail investors sell, they're just selling to big institutions and companies waiting on the sidelines. Once you sell, you might never be able to buy back in, isn't it? Now, prediction 3. Tokenized securities will exceed 50 billion in value. In 2024, the growth of blockchain-based securities was at 61%. And currently, around 12 billion in tokenized securities are deployed on the blockchain. With $9.5 billion of that being private credit securities, these securities are now listed on Figure's sitemap permission blockchain, which is a financial blockchain platform. The sitemap permission part means it's not fully decentralized like public blockchains. Think something like Solana, Ethereum, like NSUI. And only certain people can participate. OneNet believes 2025 will be a crucial year for the development of tokenized securities. So in the future, these securities will be issued on public blockchains.
But then you've got a big focus on tokenization. So this is where you tokenize financial instruments. And you've started to see a lot of momentum build across, again, the institutional landscape.
I still don't understand that one. I mean, it's the idea that, because you can trade financial instruments now, why do you need to tokenize them?
Well, a lot of it's about improving the efficiencies of the market. So the ability, for example, to settle within, a minute.
Instantaneously, yeah.
And it's just the ability to be more precise in the use of liquidity and capital. And also, over time, to actually kind of proliferate products to a broader cross-section of the market.
And institutions like DTCC, which handles clearing and settlement in the US, might start working between public and private infrastructure. This will solve the government's need for anti-money laundering, AML measure on chain, as everything will be verified via KYC. They also predict that the Coinbase could tokenize their own coin stock on their base blockchain, which will mark a key milestone for tokenized securities. Now, prediction 4. Stablecoins' daily settlement value will reach 300 billion. In 2024, the monthly trading volume of stablecoins grew by 180%. OneX believes that by 2025, stablecoin daily settlements will hit 300 billion. That's a 3x increase over November 2024's 100 billion daily settlement, meaning that stablecoins will become a crucial part of global commerce. Besides trading, the remittance market will also explode. For instance, stablecoin remittance between the US and Mexico might grow from 80 million a month to 400 million due to stablecoins' rapid transfer speed, low costs, and incredible practicality. Alright, prediction number 5. OneX believes that the AI agents will surpass 1 million on-chain agents by 2025. These AI agents are specialized bots that execute tasks between user requests. For example, you could ask one to maximize your returns or increase engagement on platforms like Twitter. These AI agents are typically supported by decentralized protocols and are designed to perform on-chain tasks. Right now, most focus is on decentralized finance, DeFi, but OneX believes that the use of AI agents will soon expand into other areas, like influencers and NPCs in video games, and even virtual companions or assistants. I have actually had a conversation with some crypto friends about the concept of AI influencer agents. Basically, an AI that acts as a social media influencer. It's not a real person, right? But their analysis and insights may actually be more powerful than a human influencer. That may be a little lacking in emotion connection though. So imagine an AI agent talking to you about Bitcoin, giving you all the analysis, but without actually buying any. It's like me talking about Bitcoin, but with AI doing all the heavy lifting of analysis. I mean, I'm not sure how I feel about that. Imagine the future though, where AI helps me make these videos, that I wouldn't even need to shoot the videos myself. I could just relax on the beach, petting my dog or something, and the AI would do everything. In fact, the AI agent concept has already generated 8.7 million in just 5 weeks. And OneX predicts that by 2025, over 1 million new AI agents will be created. And the people creating them can rent out their agents to generate revenue. Prediction number 6. OneX predicts that the total value locked TVL in Bitcoin's Layer 2 will reach 100,000 Bitcoin per 2025. But first, what exactly is Layer 2? Well, Bitcoin's main blockchain Layer 1 have some limitations, like slow transaction speeds and longer processing times. Think of it as a crowded highway with traffic jams. And Layer 2 is like an overpass built on the top of the highway, allowing for faster transactions, lower fees, and the ability to process more trades. A great example of Layer 2 is the Lightning Network, which speeds up transactions by handling some steps off-chain and then batching them back to the main blockchain. And Layer 2 also introduces features like smart contracts, which is a key enabler of decentralized finance DeFi applications. In 2024, Bitcoin Layer 2 saw rapid growth, with TVL hitting 30,000 Bitcoin, a 600% increase from 2023. And there are currently over 75 Bitcoin Layer 2 projects in development, though only a few will stand out, and many might fail. And the report predicts that by 2025, the total value locked in Bitcoin's Layer 2 will surpass 100,000 Bitcoin, laying a solid foundation for lending cross-chain innovation and broader financial applications on Bitcoin network. Prediction number 7. OneX predicts that the Ethereum's blob space will see rapid growth, generating over $1 billion in transaction fees by 2025. Okay, now if you're not tech savvy, this might sound a little bit dry, but trust me, it's super important for your investments. First, let's find out what is blob space. It is a special data layer used by Ethereum to handle Layer 2 network data. So the goal here is to make transactions faster and cheaper. And Ethereum's blockchain can get pretty congested at times, with transaction fees skyrocketing to like $50. You could literally have a fancy sushi dinner with that amount, right? So what Layer 2 does is compress its transaction history and upload that compressed data to Ethereum's mainnet for the final settlement. But here is the kicker. Ethereum users pay those transaction fees in Ethereum. Each time data, which is a blob, gets uploaded, there is a fee. But why does this matter so much? Sure, Layer 2 projects are fast and efficient, but for Ethereum, they don't contribute much to the Ethereum price. Why? Because Layer 2 networks have their own native tokens to settle fees. So they rarely need to pay Ethereum's mainnet fees. And here is the problem. Layer 2 is like an overpass built on Ethereum's main highway, the Layer 1 blockchain. So the purpose of the overpass is to relieve traffic on the main highway. But because each Layer 2 has its own token, the fee traffic, aka the money, isn't really flowing back to Ethereum itself. This dilutes economic value of Ethereum's mainnet and can slow down Ethereum's price growth. Now, enter blob space. This is where Layer 2 projects are required to pay Ethereum's mainnet for using its infrastructure, the highway. And the catch? They don't have to pay in Ethereum. So this creates more demand for Ethereum as people need it to use Ethereum's main network. It's a smart way to make Ethereum more valuable, ensuring the highway Ethereum gets its due while Layer 2 projects still get to speed up traffic. And OneNet predicts that by 2025, the fees generated from blob space could exceed $1 billion, helping to solidify Ethereum's dominance and hopefully give Ethereum the growth boost it deserves. So fingers crossed, Ethereum price, please. You know what I mean. Prediction number 8. OneNet predicts DeFi will hit some massive milestone by 2025, with a projected $4 trillion in DEX, trading volume and $200 billion TVL, both of which will be historic highs. The trading volume on DEX has already reached new peaks, and more people are jumping into the world of decentralized trading. However, while trading volume has surged, the DeFi ecosystem is still not fully back to its peak funding levels. So while DEX volume is on the rise, TVL is still catching up. OneNet's prediction suggests DEX trading volume could exceed $4 trillion, making up around 20% of the current centralization exchange trading volume. And the reason behind this growth? The demand for AI-related tokens, the rise of more consumer-facing DeFi applications, dApps, and a lower barrier to entry for retail users. Plus, with tokenized securities and high-value assets like stock and bonds making their way into DeFi, there's tons of incentive for more people to jump in. Now, prediction number 9. The NFT market is also expected to bounce back, with transaction volume potentially reaching $30 billion and about 55% of its previous peak. During the 2022 to 2023 crypto bear market, NFTs took a serious hit, and many thought the whole space were done. But with the upcoming crypto bull market, a new generation of investors will likely to diversify their portfolios, and many will turn to NFTs that hold cultural significance in the crypto space. This will shift the market from being purely speculative to focusing more on cultural value. As for Ethereum's role, it currently dominates NFT trading, holding around 71% of the market share. But by 2025, OneNet predicts that figure will rise to 85%. While the NFT transaction volume may not hit the crazy highs of 2021, but by 2025, it's expected to hit $30 billion, a solid 55% of 2021 peak. Alright, prediction number 10, the last one. OneNet forecasts that the performance gap between dApp tokens and Layer 1 tokens will begin to close. So currently, Layer 1 tokens like Ethereum, Solana, Avalanche outperform dApp tokens, including those tied to DeFi protocols, the NFT market, and GameFi. The evidence? Okay, that's the MVICLE index. This index tracks smart contract platforms has surged by 80% this year. Meanwhile, the MVIAL index, which tracks dApp tokens, has only increased by 35%. Quite a difference, right? And Layer 1 tokens represent the foundation of the blockchain ecosystem and have naturally attracted the most capital. However, OneNet predicts that by the end of 2024, dApp tokens will start to catch up due to innovation and increased utility. The gap between the performance of these tokens and mainstream Layer 1 tokens will narrow. Some of the dApp sectors OneNet is watching closely, including AI-related dApps and DePIN projects. And DePIN refers to the integration of blockchain technology with physical world, such as blockchain-powered smartphone, decentralized Wi-Fi hotspots, and sharing computing power. For instance, if you have unused computing power on your computer, you can link it to a platform and get rewarded with tokens. Alright guys, these 10 predictions are extremely optimistic about the future of crypto, and I'm super excited what is going to happen in 2025. The market looks set for even more growth, so now it's time to start planning, and here's some motivation before we wrap up the video.
presently, most institutions really have almost zero exposure to blockchain. So once they start engaging in the space, it should do well.
So this fund that you run is an institutional fund, correct?
Yeah.
So what kind of conversations are you having now to segue into that time when institutions can actually allocate money?
Oh, it's really changed since the election. Last summer when the markets were very low and we had very little interest. And since the election, so many people are trying to figure out how to get exposure to the space.
What do you think? Drop a comment and let me know your price prediction for Bitcoin's peak in this cycle. By the way, guys, feel free to join my Telegram group in the link down below. You will get access to more trading strategies, signals, and market analysis, including some game-changing opportunities. Anyway, I can't wait to hear your thoughts. Stay tuned and I will see you guys in my next video. Bye bye.